What's good, YouTube? So to start off today's video, I do want to say I did choose BP Capital as my name, but then I realized there's another BP Capital, a major firm, fund management. Not exactly sure what they do, but I'm not trying to get sued for copywriting or whatever they could sue me for in terms of the name. But so I'm gonna be trying to figure out what I'm gonna change my name to over the next maybe few days, couple weeks. I just gotta really find something that sits with me. It's hard, yo. Like, I just need something that rings, right? That was the whole point of the name, and I thought BP Capital rang perfectly, but unfortunately I can't do that, so we're gonna switch that up. But that's not the main topic of today's video. But before we get into it, like this video and subscribe, because I want to share gems with y'all. I want to be able to provide value. I want other people to see this video too, so just subscribe. But today's topic is, I have my biggest trading day in my trading career so far, and I made basically about $500 in a day, which is surreal to me because even as an engineer, I don't make $500 in a single day. So to see that the market was able to give me $500 in a single day really blew my mind. And I knew it was going to come. It's not like I wasn't aware it was going to come, because I was thinking to myself, yeah, it's going to come over time. But that $500 came quickly, because it was only like maybe 2 months ago I was saying to myself, oh, it's going to take longer to get to that point where I can make $500 in a day. And I did it. Now, to be transparent, it doesn't mean that happens every day. It's going to be consistent every day. It's just happened to be my biggest trading day. Like I said in my last video, currently on average I'm doing 100 to 200, but I think now the average is going to be maybe 200 to 300. But it's still amazing. Profit. I'm grateful, right? And I'm gonna put a screenshot too of the profit in my MT5, because I use MT5. I'm gonna show a screenshot of that too somewhere in the video. But y'all, it was crazy because, like I said, like going into it, I was just trading. It was like a normal trading day, and kind of the way I trade is kind of a lot based on timing and the time of the week. So I kind of have to figure out when I'm gonna enter and how long I'm gonna hold my trade based off the time of the week. Like if it's a Monday, is it Tuesday, and I kind of adjust my strategy from there. And then am I going pro trend, counter trend? So it gets really important when I'm looking at it that way. But it happened early in the week, so I kind of knew I was gonna get a big trade out of it, but it was just like, it hasn't happened in so long for me to get that. Like it just happened. I was like, oh, here's $500 in a single trade. Now it was actually closer to 600, but it was $500 profit for the week because I did take a loss that day. Like I said, being transparent, y'all need transparency. So it was really important for me to really point that out, because it's not like that trade just like was a flawless trade. Oh, I made $600 in a single trade and that's it. No, I took a loss before that. I had to take a loss to get a win. Like I said, it's like any normal business. You have to take L's. You gotta have expenses in order to get a couple wins. You feel me? Kind of makes sense, right? But it was kind of hard to hold that trade, I'm not gonna lie, because I held it. It was like a 200 pip trade on gold, because I had to deal with a lot of drawdown and fluctuations in price, and it was just crazy, man. But yeah, and oh my gosh, what else can I talk about? Oh yeah, so that loss I did take, I'm gonna be honest, I didn't have to take that loss. I'm not gonna hold y'all. That loss was actually a bad mindset play on my end. I kind of got greedy. Well, not greedy, more impatient. That was what it was, because I had a set area where I wanted price to retrace to, and I just thought like, oh, price is gonna do this on the 5 minute and it's gonna fly up. So I entered a little bit earlier, and it reacted. Don't get me wrong, it reacted, but then immediately went down into drawdown. And went exactly to the place where in my 15-minute zone where I was expecting to enter the first time, because I got scared. And that's a lesson I'm taking from this week. And when I do the whole trade breakdown, y'all are gonna see that I'm gonna show you where I took that L on the 5-minute, and I'm also gonna show you the 15-minute entry that I actually took and how I was kind of my thought process on that trade. And that's pretty much, you know, what happened. I mean, there's not much to really expand on that. You know what I'm saying? It felt good. It felt good knowing that I just made a big amount of money, more than my job paid me that day. So I think it was important for me to share this video. But let's get into the breakdown. I'm gonna switch out to my computer screen. All right, y'all. So I'm about to break y'all down this trade just so y'all kind of understand like what I was going through and what was kind of going through my head and my thought process and all that. So let's just start from the monthly. And I want to say this before I start. Like, the way I made this money, I didn't simply make it from trying to flip an account or over leveraging or over risking. I risked like 3% on this trade. It's a little bit, you know, heavier than that typical 1 to 2, like the standard, but it wasn't like I risked 10% of my account or I did anything crazy. Like, this was just a normal trade. I did catch a lot of reward on it versus what I risked. That's essentially how I caught it, but it was also calculated and part of my strategy. Now, get into why I did that, but yeah. All right, so okay. So start off with the monthly. So the way I trade basically is based off a system, basically like fresh SNR levels and all that stuff. If you guys really want to go learn this like ASAP, I would go refer you to AKFX. He explains it really good. Eventually, I'll probably try to explain it myself and the system and how it works, but that's not my whole system. Like, my system, my direction system is based off of his system, but everything else is kind of a combination of like engulfing candles, fresh levels, fresh support and resistance levels, to be clear. What else? Imbalances. Like, so I kind of have like a few concepts in my head that I use, but it's not just that one thing, but like in terms of entry system. But now in terms of just like identifying direction, he's your guy. And to be honest, I feel like direction's everything. That's kind of how I found like my consistency improved a lot more. Okay, though, let's see this. So monthly, right? So based off the system, this monthly was bearish because at the time, this was the I can't look at this candle because this candle is still forming, hasn't closed. This right now, monthly is bearish. So if I went to the weekly, there's some sort of confirmation, basically like, you know, the last high. Basically the last high or low before it reaches this the higher level, if you're looking at time frame below. So basically your monthly up here, I'm doing a terrible job explaining this, but basically if you look at your monthly up here, you want to see what one time frame below, what was the last low or high before it rejected that level. So basically go to the weekly, and basically we can tell it was this one. We look at that break. Once that break happens, confirms that's a bearish sort of play. So now we see that the flow is bearish. There was no fresh level for the weekly, so I didn't really pay attention much to anything on the weekly. I just still thought it was bearish because the last thing I saw on the weekly that was like a fresh level reject was up here. So I'm gonna mark this teal. That's kind of how I color code my things. So saw this breakdown. So now it was the last level that broke the weekly over here. That was a break. So this break at this level created basically that confirmation that weekly is bearish. Now monthly and weekly are bearish to me. That's the overall strong direction of storyline. Basically that's what I'm paying attention to, or the trend. It's storyline, trend, same words. People just spin up all these different words to make it seem like, you know, intricate or special, but bro, they're all the same thing. Let's go into daily. Yeah. So now the daily is where everything kind of switched for me, right? Daily was bullish on this. So that's kind of where I drew my buys kind of for the day and the week. That's kind of what I'm paying attention to more times than not. But when they all align, monthly, weekly, daily, it aligns for some powerful moves. even if it's just daily and weekly, right? So let's go over here. So this level right here, right? I paid attention to this level because this level is a special level. Basically, it's like OHLC, but basically it's like a hidden support and resistance within there. If you basically go on a smaller time frame, like if I pull it up, you'll probably find some sort of H4 like, you know, level that price rejected, right? See that? Basically like a support or HNS level, if you want to say, like right there. Like that's basically all it is. It's just some hidden support within it. But let's go back. So I see this reject. Once I saw that reject, okay, I'm like, what's the last level before price came here on H4 that confirmed this level? So basically I'm looking at this. So price breaks low, this is a low, so then this is the high. So the last high that touched this level before price got here was this. So this is where it came from. So now what I'm looking at was here for price to confirm. Okay, price broke through and confirmed. That's great. Now, typically my best setups and entries come from when the daily pulls back into a daily level, like over here or down here, or like a classic level over here, which is like a fresh SNR level. So basically that's where I would be looking for my entries. Now H4 on the other hand, I don't use it as much. I use it more as like if there's a H4 within that level, so there would have to be H4 below this level or H4 below this level, kind of be able to kind of filter out where I want to enter, but and like precise it a lot more. But in this case that didn't happen. So the reason why I had a strong logic of I'm not going to wait for the daily to do that, because we had this strong push down the week before. This is what kind of made me approach it a little bit differently. I saw a strong drop. We kept dropping for days, like what, 1, 2, 3, 4, 5, 6, 7, 8, almost 8 days straight, just price melting, barely any pullbacks to get into the trade. It really wasn't like a great week. Even that week for me was like kind of rough, like kind of threw me off, to be honest. I still came out profitable, but definitely was just like a weird week. But let's just go up here, right? So I'm gonna show you something. So looking at the fib, so what I like to do is I kind of like to assess where price is gonna pull back to at the bare minimum based off fib, right? That's kind of what I do. Like 38 is pretty cool. I have ways to kind of say if if the 38 is gonna be the reaction point, but more times than not, I'm counting on the 61 and the 50 to do it. But I have ways to kind of tell if early or not. But basically I would have to wait for some sort of confirmation on these two levels, and then 61.8, 61.8, I'm taking that like risk entry if anything. But that's like based off lower time frames. Now on a higher time frame, definitely some sort of confirmations and all that. But let's get into what actually made me take the trade, because there was no daily level that made me take the trade. But I just kind of knew price was going to keep flying until it at least got past to like those levels, right? And I don't want to say new, it's just like I anticipated it. That's kind of how I look at the market, because if we don't know what happens in the market, we just kind of anticipate. So originally what I wanted price to do, I was waiting for price to get here on H4 and pull down into this H4 level. So it's basically this our RBS resistance becomes support level. It didn't pull back into it, and especially around what, this was around 9. I wasn't seeing it pull back, and I was getting a little concerned. So what I did was paid attention a little bit to the hour and what it was doing. But when I realized, it was like, okay, we're kind of doing this little motion, right? We came down. So I was like, oh, that's interesting. So what I did was like, oh, let me look at my other sort of method of looking at basically support and resistance, right? So I use engulfing candles. So it took basically 2 candles to engulf this candle, right? And when it comes to engulfing candles, I like to use a longer wick, just because price can take off from these areas. It can take off and fly. And this is something I learned recently. It's not anything like I've learned from months or studied from months. This is something I actually learned recently, right? So when price came within this level, now I'm starting to understand, okay, that's where price is actually reacting to. So then I'm like, I go back to here and I'm like, okay, now my confluence is starting to line up, right? So boom, I look here, I got a trend line going. I can see a trend line going into this level. This is the same peak of that tip of the level, right? So I'm like, okay, let's pay a little bit more attention to what's going on. And when price basically got in here, what I essentially was waiting for now at this point, because so I had to, based off the way this engulfing thing works, I can filter, what's the word I'm looking for, precisely, kind of the same way like you would find an entry. What I did was, okay, this over here was a engulfing within the engulfing. Now it wasn't exactly within the engulfing, but it was within it, just because the it entered within here. Sorry, actually no, this would be the pick. No, I'm bugging. I don't know what I'm saying right now. Is that how I got in? I don't know. Wrong. Okay, I'm trying to remember how I got in. It's just like, I thought that's how I got in, but that's not how I got in on this one, because it would have had to been down here at this point. But so the way I got in actually is because the way it works, you can actually go 2 time frames below when it comes to the engulfing sort of strategy. You can go either down to the H1 or M15 if you're using H4, the H4 engulfing. So when this came in, I even though I saw this H1 as a confluence over here, basically when I saw this candle, I kind of got a little concerned. So I went down into the 15-minute, and I saw that 15-minute actually had its own engulfing candle, which was this up here, right? So it created that engulfing. I was like, okay, so price might take off from here, but I'm not confident enough to take it in here. So what I could have done is gone to 5 minute or 1 minute and look at it, but I hate going down to those time frames. So what I used was a different sort of confluence. You typically, break a structure, right? Also, I looked for this level to be broken. What was it? Wait, hold up. 1, 2, 3. No, I needed this level to be broken. That's what I wanted. So I waited for this level to be broken, and when I saw it as that, then I'm like, okay, I can probably be a lot more confident to take this now, because now the confidence line up. I saw that trend line on the H1. They got that H4 engulfing. We're going inside there. Now let's take this off, and I'm gonna show y'all where I took my loss, because I got impatient, right? So I actually took my loss around here because I wanted price to come in here and just, I don't know, I felt like because of the way price is moving, I thought it was just gonna fly up and not really pull back into my M15. I kind of got scared, so FOMO basically. Typical mistakes, right? And then you could just see, like, price is fucking, it destroyed me. It just went through and like barely had any profit on that. But my original entry was actually supposed to be based off M15. So now if you look in here, where I was actually supposed to enter was down here, and I wanted to cover the swing. But because I was impatient, I took a loss for that. And guess what? It came right into my area and it took off. And I covered this low. Now, I usually like to just use a standard 20 pip stop loss. It's just something I learned just from my own experience. But to be honest, structure is more safe. I don't recommend 20 pips. It's just structure is more safe. But I use what I do is I'll cover the low, but sometimes I use a mental 20 pips to kind of understand what price is doing around that area. But you more than not want to bet on the low holding, not the 20 pips. The 20 pips is just kind of how I do it, and that's kind of I calculate my risk to reward and how I come up like, if either a 5R or a 10R trade, because if the trade is right and it covers low, it should be 20 pips for me more times than not. So now what happened here is, like, I saw that. Now, what also was another confluence is this break and retest trend line that lined up exactly with this level. So I was like a gap flip level, which is also like a OHLC. That's all it is. Just basically just a flip level of the basically a broken resistance turned into a support. Didn't really hold, but you see price went up. But I used that break and retest, and price didn't react to the trend line the way I would like it to. But either way, I got an entry. Now, where I decided to hold it to was a daily level. I actually looked at this daily HNS level because no level was fresh, right? It was really no fresh level for me to take like this. We came in here and this level was, it could be fresh, but I don't like to bet on these levels because I can't really tell when they're ever gonna react. Especially my number one rule I like to use is back to the fib, right? If the level isn't above the 38.2, I don't really consider it even a valid level to look at as a rejection. So if anything, it had to be something above here. So this level, I could have said, hey, like right here, like price could reject this, and it actually had a reaction here, which actually kind of scared me at some point, to be honest. But price came back up into here and pulled back and then came back to my HNS level. But I was more confident on HNS level because it's a fresher level. It can be used multiple times. I didn't really trust this level over here. So it kind of was weird. So, but that's how I took my trade, was based off that. So this is where I took my trade to. So this goes back to the beginning where I said, I don't need to, risk a lot to make a lot. I have a certain way I trade that allows me to catch trades like this. So, and then like I said, my risk score was based off that 20 pip. So I was basically risking $60 in a trade, but it was based off, I covered 24 pips, but I was risking 60. So $60 for this trade got me to here, which was actually 10R. So if I did that 20 pips, 10R, and I'll just fast forward it for y'all so y'all see kind of what was going on. I want to extend this a little bit just so y'all can see it. You see that? Now remember how I said price had a little rejection over here? I'm gonna show this y'all. I'm gonna show y'all this line because this is where I was saying like I got scared because it didn't hit my TP. It just hit this line and rejected. You see that? It rejected. It didn't touch my TP. I got a little scared. I'm not gonna lie. I kid you not. Price went down this much into drawdown, y'all, and I got scared. But price came back and I stood strong. Stay strong. I hit my TP. That was a 10R trade, but 10R wasn't just because I wanted 10R. Like, no, like this is something I've learned in strategically, like especially with gold, there's a tendency, right? You gotta think about the way the candles are made. It was based off timing, right? So this trade happened early in the week. You gotta think about price cycles, right? In the week, price has to make the bottom wick at the beginning of the week, and at the end of the week has to make the top wick, so it has to pull back. But what happens in between there, right? What happens in between those days? How is a candle body formed? A candle body is formed through price going one direction most of the week, right? And that basically was my logic. So, hey, price is gonna be bullish. I'm like, what is it gonna do if I'm expecting a bullish candle to end the week? And what price does on Monday is telling me, hey, like we're going bullish. Like, okay, if Monday ends bullish, I'm assuming most of the week is gonna be bullish. I'm sorry, like that's how I go. Like some days it doesn't happen like that, but I'm just thinking most days is gonna be bullish. Monday, Tuesday, Wednesday, and then Thursday gets shaky because sometimes there can be some pullbacks. But Friday's more likely not gonna be a pullback, and you're gonna see that little draw. So I try not to trade in that same direction Fridays. So Monday I'm trading pro trend, pro storyline. Tuesday same thing. Wednesday, Thursday same thing. But difference is on Monday I'm holding longer. If I get a trade on Monday and it's going pro trend, pro storyline, I'm holding longer. If it's on Tuesday, I'm holding longer. I'm probably going to hold for 10R if I have like a support, a resistance level I can look at on the daily time frame. Because keep in mind, markets are fractal. Price can go from weekly to weekly, daily to daily, H4 to H4, H1 to H1. That's how price moves. But the bigger time frame is always going to be priority. And because my analysis was based off the daily, and I just broke it down to a smaller time frame, this allowed for me to take it, not from any random analysis, right? So it was just important for me to kind of state that, like, I didn't risk a lot to make the type of money I did. I actually just held the trade a little bit longer. Like I said, my typical trades are 100, 200. So, 5-hour trades, like I'll get, if I can't get it in the beginning of the week, by Wednesday, Thursday, I'm more than likely not only taking a chart trade for like 5-hour. Same with, with Fridays, I'm not even trading the same direction. I'm expecting a counter trend pullback. So what I end up doing is I actually want to go for 3-hour because it's counter trend and it's already risky. So it's kind of the same, like that's kind of how I trade and how I see the markets. Then obviously there's news. I'm not too good on news yet. I'm trying to get better with that. But it kind of helps me like have some faith and like strength into what I'm like looking at and what I'm thinking, right? And there was something important I want to tell y'all. Like, oh yeah, like this isn't a typical week. Like I said, this happened once. Like it's happened multiple times. 10 hours happened to me multiple times because of the way I trade. But this hasn't happened for me in almost 2 weeks. Like I was just having like a normal week the past 2-3 weeks. But the week before that was like a 10-hour big week. But they're all like, it's like it doesn't come like that. You have to like just trade your flow, trade the way you do, and just know as it's coming. Mind you, I don't have a crazy win rate either. I don't want y'all to be under the impression that I'm a 90% win trader and this is what I catch all the time. No, bro, no. What I catch is very big trades. I have a hit rate about 40%. Was a lot worse. It was over time I realized, hey, stop focusing on the win rate, start focusing more on your risk to reward. And I just had some like videos and research that actually ended up making me think about my risk management a little different, and made me start saying, okay, like, hey, this is how you should trade it, because you want to be able to catch most of the week. You take less trades, your win rate will go up. And honestly, I didn't think my win rate was going to grow up at the time, but it actually went up to like 40. Now it's like on the rise to 50%. And it's like the less trades the better. I was taking a lot of trades before, only going for 1 or 3 with a terrible win rate of like 33%, basically being break even or a little bit in profit every week, maybe some weeks some drawdown, but it wasn't the best. But once I kind of adjusted it to be like, hey, there's 1 to 5 sort of thing with 1 to 10, but based off actual technical analysis and knowledge and reasons to back it up, that's when everything started rolling like started flowing like nicely. Now, I think this is only going very smooth because it's like a trending market and gold really moves like that. But in consolidation, I'm gonna have to be a little bit more careful and have a better precise entry that can put my win rate up on top of it, and probably hold for less, because consolidation is going to be bouncing back and forth, right? But like I said, I have other entry systems. I have other ways of trading. Like, I use imbalances, I use these engulfings, I use fresh support and resistance. I'm not gonna teach that just yet. Like, these are things you can, go on YouTube and find. Like I said, I referenced y'all to AKFX, right? My strategy comes from a combination of AKFX, Swag Academy, who else? ICT. So, and also, shout out to my boy Swaggy. He was the one that actually motivated me, bro, to keep going with trading when I first came across his videos. I'm just saying that. But yeah, ICT, who else was the other one? Dapowillis, right? And Dapowillis was probably the person that really put it together for me when it came in terms of my risk management and how I see the market and how long I'm taking it. Like, he's a newer trader I've seen on the market lately, at least from my perspective. But yeah, I still took an idea from him. I saw it online. He was talking about it, and I said, hey, why aren't he basically thinks the same way as me when it comes to high time frame analysis? Why don't I try that? And that's what I started doing, and it started working out for me. And that's why my quarter just ended up being amazing, and that's why I was able to catch a $600 trade only risking $60. Like, it's amazing, bro. Like, the things this market can do for you is crazy. But yeah, I mean, that's basically the breakdown of this trade. Like, it was, like I said, nothing crazy. Use some weird ways of getting in. Like, I'll definitely go over them, and like as I learn how to explain them better, I will definitely like start showing y'all on YouTube and like trying to explain it and break it down. But man, these things are, it's some powerful tools. You guys can find plenty of free resources online. Go to AKFX, like I said. You're gonna get a lot of good content from him. Just the base, like his, I honestly think you could just trade his strategy and not need anything else. But for me personally, I couldn't just trade his because I had this way of trading inside me that I just couldn't just do his way strictly, because it was kind of throwing me off for some reason. It's been a while since I like used his way strictly, but I had to like kind of go back to like the roots of where I was, like, because like, I originally started trading Swag's strategy. That was what I kind of started off trading when I really took trading seriously. Then I shifted it to smart money concepts, and then I came across ICT, and that's where I focused a lot of my efforts and energy. And that's when I started truly getting a mindset of a trader and seeing things in the market differently. And then I kind of abandoned it, and then I came across AKFX. And then my mentors obviously who helped me out, like, you know, they're great people. But AKFX's videos like were really helpful too. So yeah, man, I mean, I got nothing much. That's really the breakdown for this video, y'all. So I hope y'all enjoyed this. I'm gonna keep coming with the content. I'm gonna keep coming with the information. I'm gonna keep coming with the gems. I'm gonna keep showing y'all the journey. So I hope y'all enjoy this, bro. I'm gonna keep them coming. Peace.